welcome back to We Hate Money, episode 7, 1st of 2024. I'm your host, Arnie, and also my other co-host, Wiz. How are you, mate?
Good, Arnie. How have you been?
Yeah, all right. I've been a little bit crook, but that's par for the course when you've got young kids and, Christmas period was hectic. How was your Christmas and New Year's, mate?
Oh, it was good. It was actually nice and dry. It wasn't too cold. And got to get out of the house, see some friends and family, you know, good holiday spirits.
That's what you
But
want,
now
mate.
it's really cold and snowy. So,
So inside weather now, inside weather.
yeah. Ah, yeah.
Well, we've got a lot to talk about, but it's almost hard to sort of know where to start because, as you and I were just saying off air, there's a lot going on in the world at the moment. We've got, the war in Russia and Ukraine, and there's been a little bit of movement in the press there recently because Zelensky and Ukraine have said they want to go to the negotiating table, but not with Russia. They want to go to the table with China. And I sort of wonder if this is just in retaliation to Russia saying they want to negotiate, but not with the Ukraine. They want to negotiate with the US. Did you hear about that?
Yeah, I did. And I think it's a weird flex to say China because, I mean, I'm pretty sure China's not orchestrating the war in Ukraine. I'm pretty sure Russia is. So I maybe Zelensky's trying to get a better bailout, you know. Um, he seems to be addicted to that cash money. So
I mean, I'm not the most
I don't know.
knowledgeable, but is it
I,
has Russia
oh,
loaned money off China?
um, I haven't really looked into how Russia's financing their war. I wouldn't assume they're getting loaned money, but you know, Zelensky keeps asking for more cash from the U.S. So I would imagine that he's probably trying to flex on Russia, but it just doesn't make sense to me because as far as I know, China has just sort of been a sort of like just been in the background, you know,
It
kind of
only
being supportive of Russia, but not really
it only
jumping
makes
into the fray
sense.
with.
Oh, sorry to cut you off, mate, but it only makes sense if there's like some sort of financing going on from the China perspective. So otherwise,
It
it's
could be the
maybe
oil they buy. Could be the oil they buy from Russia. Maybe it's a some kind of deal they want to make with China.
that's probably what
Maybe
it is,
some.
actually. You know what I mean? Like maybe they're not directly loaning money to Russia, but maybe they're the big buyer of what assets they have for sale, and without those sales, Russia would be effectively cut off from the world because the West has all those economic sanctions against them. So perhaps that's what they're saying. But anyway, it's an interesting
Well,
from an economic perspective.
that,
It's an interesting scenario.
well, sanctions be damned because it turns out Europe's been navigating those to still buy oil from Russia. So, I mean, I don't think the sanctions were ever that serious is the problem, or practical to
You
begin
think
with.
so? What they're buying from a third party sort of thing, like circumventing it.
I think I read they were getting it through India or something like that. I'd have to go back and find that article, but it kind of made me spit my coffee up, so I remembered that. And it was written about a week ago, so
I do
um,
recall early on in the piece, China and India negotiated to buy at like a bargain basement price, and then they were on selling it.
yeah,
Or taking as much as they needed for themselves and then on selling it. So yeah, it doesn't surprise me.
I I'm not surprised by it either. And I even think that the U.S. was buying oil from Iran, and I think some of that was even Russian oil. So I couldn't even tell you that. I just think that it was a very badly thought out way to isolate Russia. Um, the whole response to Russia is such a European response. I mean, it has all the fluster and roar of somebody who's upset, but then there's just nothing behind it. It's like we'll give Ukraine a lot of money and weapons and see where it goes. All right.
Yeah, yeah. Well, maybe it wasn't
I
a
don't
very
know.
well thought out strategy. I mean, yeah,
It it feels like it was an attempt to make a strong response, which I can't blame or judge anybody for that. But then now it feels like it's all falling apart.
Yeah.
So maybe a stronger, more united, cohesive, direct blow to Russia was necessary than sort of just adding a bunch of sanctions and kind of sort of funding Ukraine.
Well,
And
as a sort of a segue, I mean, you mentioned Iran. The other war that's occurring at the moment, Israel versus Palestine. I know there's been certain pundits that are sort of saying that this an escalation in this conflict could I mean, it'll have a lot of impacts, but one particular impact is it could cause oil prices to soar, up to $150 a barrel, whatever. Um, and that could sort of tip the world into a global recession. Have you been following any of these sort of news stories, Wiz?
there, yeah, I've heard a lot about the oil prices spiking ever since the conflict started. Um, and I just haven't seen that materialize. With the Red Sea attacks going on, I think that's an actual catalyst to make that happen. I mean, you'd need to see all of the OPEC nations sort of lockstep to really cut production to make 150 happen, or a complete shutdown of the Red Sea area. Continuing attacks on vessels most likely will do that. I think there was a shutdown today actually from a oil transport. So we're at least through the Red Sea. The most likely they'll go a long way around, um, and we'll find out. So if
Yeah.
they lift if insurance companies stop covering these ships, I think that's the sign you're going to see a blowout in 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 oil prices and in any kind of shipping costs. That's already starting to go up, but it's nothing like it was in 2020.
So
So
indirectly, you're saying it's going to affect the prices of shipping companies, etc., things like that. Who knows how bad it'll get, but if we get to a similar supply shock scenario of what occurred in 2020, 2021, yeah,
yeah, 2020 was such a forced shock too. Like it's not like this natural sort of conflict. It was like every government in the world kind of saying no. So with with this sort of buildup, I think traders have become too accustomed to seeing huge spikes in prices, because of that sudden volatility. So I think that's the issue with comparing it to 2020, because the circumstance of that shutdown were so dramatic.
yeah, I don't think we'll see it on that level again. That was sort of unprecedented, wasn't it?
Yeah, I mean, we may get high up there in terms of the price impact, but I mean, in 2020, also oil went to zero. So
Yeah, well, wasn't it
yeah,
negative? Like you could get paid for
yeah,
taking
they
delivery. Yeah.
negative $40 or something a barrel was like the blip or something like that. 20, I don't remember. But yeah, I mean, we can see a lot of damage from this. It's just the question everybody has to ask is, should we really be looking for these types of one-offs again? I think the answer to that is no.
Yeah.
I Yeah, but yeah, it's funny because transport shut down completely, and then all of a sudden now we're saying, oh, transport's shutting down over there, and oil might go to the moon. I'm like, well, when we actually stopped international trade for a little bit or slowed it down so much, oil went to negative prices. So I don't know if they're indicative of each other. I think 150 is a lofty goal. I think you need to see a lot more happen. I need the market to show me it cares
I mean,
at this point.
you always get these crazy predictions. Oh, maybe crazy is the wrong word, but you always get these sort of predictions coming out of the woodwork when there's something like this that occurs. So
Show me somebody who's taken a bid on these, is a large speculative bid for 150, and I'll believe it more, because when people put their money where their mouth is, I then start to say, okay, 150 seems like an actual possibility. These just, articles and things saying 150 could happen. I mean, anybody could say that.
True that, mate. True
So
that. What else has been
yeah,
going on? What's your outlook at the moment for, you know, 2024? I know we're early on in the piece, but have you given it some thought?
I think we're going to see a very interesting year. I mean, we kind of talked about last time about SPY getting back up into the the mid 400s, and we've gone above that. And I think I said during the October sort of extreme bear market. I mean, I guess extreme correction. Really wasn't a bear market. Um, that we'd see, ES at what 4,500 at the end of the year. So, and then we hit 4,800 in this year. So, I mean, I think, I wouldn't say I would have aimed for the top, but I think the best case scenario came out of last year for equities. But this year, I think it's going to be mixed. I see housing is going to start to maybe have issues. Seems to be on everybody's mind coming into this year with all of the new rental properties opening up in the United States. So in the US at least there's going to be some rocky waters for housing. And I think that might upset the leverage that was taken inside of housing as well. A lot of people went out, took out a lot of loans, did a lot of leverage on those loans to get more houses, more units. And if they have to compete with a surplus of rentals, it's going to be really tough to keep those homes that are going to go underwater from having to be foreclosed on.
And are you officially, if I had to ask you to throw your hat in the ring, I'm just throwing a lot of questions at you here, Wiz, and you're doing an admirable job. But I'm just, do you think it's going to be a year of deflation? Do you think inflation will? Do you think we'll get some reinflation? Like, where do you see that?
I
That
think the dual. I think we're at the dual risk. I think you have. I think you're going to see some deflation in parts of the market continue because we've been seeing disinflation. We may get some actual deflation, and that just depends. But I think that the risk for inflation is still there. We just haven't really had rates high for longer, I guess, to kill that risk. And I think the Fed is right to continue to hold rates high well into the year. So I think you could get some higher inflation. We did get a little higher inflation in December, but that is kind of expected. So markets didn't freak out too much because of that. But I think cuts in March, which is what people still are kind of expecting. I think that would be a sign we're going to be having some major deflation, not um, not for the good reasons.
Yeah, that's right.
So
Well, I know China officially was in a period of deflation as of the last quarter of last year. Actually, maybe even earlier. I think it might have been reported around mid-year 2023 that China had, you know, the CPI had decreased year over year. And
yeah,
that had been a while since I can't remember how many years it had been since they had a decline like that. But the PPI had also been declining for consecutive months over months and year on year. Um, and yeah, so that's interesting how that's going to occur. And if they obviously a big exporter, um, how that might affect their market and the global market. So I think it depends
I
on
think
how countries can insulate themselves from a country like China. Obviously, the US is pretty insulated and self-sufficient. I think Australia is the same, but yeah, it depends on the countries that are buying from China.
yeah. There's the manufacturing index. I think just came out today. I can't remember which one, and it is. I think we're seeing declines below the Great Financial Crisis. So something's going on, at least U.S. manufacturing still. Um, so I don't know if that's because there's maybe a surplus of cheaper imported goods. I'm not sure how that works, but it's an interesting metric because I'm like, well, if it looks like we're teasing recession, but nothing else is, makes you think. But employment news though was questionable too. All the new jobs we had, Arnie, are like part-time jobs.
Or cyclical or
So
seasonal, or what was it?
I'm not sure that they were seasonal, but they're not full-time employment anymore. So we're seeing less full-time jobs being taken. So maybe it's because more people are getting a second job or just scrambling to get work through the holidays. And then a report that came out that said 50% of, I think, of Americans, and well, who knows, maybe respondents is better, don't feel that they will be able to pay off their credit cards in January from what they spent in December. So it just an indication we have more credit usage in the U.S. We're seeing jobs numbers that aren't really consistent with growth, right? Necessarily. We'll have to wait because these things are trends. So, I mean, unemployment in the US is like 3.7% right now, I think. We're not at the Fed's sort of warning line, which is like 4.5%, I think is what they said they want to see it up to. So I think if we get to 4.5% unemployment, I think the Fed will be more respondent to easing. Kind of just, an outlier there. They're just keep in mind.
Yeah, Australia's I guess
You guys are
holistic.
still selling coal to China, so you're good.
I think thank God. Yeah, thank God they're still buying, but we'll see how we go. I don't know. Our cash rate is at 4.35%, and we had lower than expected inflation figures the last time they reported. I think our annual inflation dropped to approximately 4.3%. That was down from 4.9. So um I don't know. The big issue at the moment in Australia, well, I don't know if it's a big issue, but it's like an ongoing issue. It's just like asset prices, in particular homes. Like we've had, I think it's something like 13 or 14 rate rises over the last couple of years. And there's a bit of mortgage stress going on in the market. So I think I think our low here was 0.1% and it's up to like 4.35 or whatever. Um, so
You're
yeah,
seeing that in Canada too, where people are getting their variable rate loans hitting.
that's exactly
And
what happened because in America, you guys can have a fixed rate for the life of the loan. In Australia, you can have a maximum fixed rate 5 years. So everyone who was on a fixed rate on these ultra low interest rates were rolling off that 0.1% into, 4.35 or higher. Like 4.35, it wouldn't be 4.35, it'd be like, 5, 6, 7, whatever it is on top of so the bank can make their margin. I've actually heard anecdotally people telling me that they, weren't getting a broker to look at it or calling the bank themselves. And before they knew it, their rate was up to like 8, 9%. Um, so that's a lot. Like when you've
because
got
they got
asset,
to,
sorry, go on.
oh, sorry. Well,
I
I
was
was
just,
like, yeah, because they got to make a difference on the spread, right? So
that's exactly right, mate. And when asset prices are so high to begin with, if you're, relatively new in the market, not established, not a boomer, then you're hurting right now, and like a lot of your disposable income is being pushed towards the mortgage, the interest repayment. So that's a big thing in Australia that I'm sort of watching as a catalyst. That's why sort of everyone, I mean, for different reasons to the US, but a lot of people here are clamoring for interest rate cuts, saying they want to see, in the first quarter of 2024. And like some economists are saying they want to see three for the year, like three this year,
yep.
three next year. I don't know if that'll happen. I think they're going to just keep monitoring the inflation scenario and just keep it as high as possible. And in a way, people don't like to admit this, but it's sort of like you have to sort of follow what the US does anyway, because if you guys don't cut and we cut, then our dollar weakens against the US dollar, and it's already pretty low. So their hands are tied in one sense, even though that's not officially one of the mandates of the Reserve Bank of Australia. It's almost like a secondary goal, if you
It's
will.
it's kind of self-defeating. Like, how can you possibly, respond to anything if your currency is being devalued?
Yeah, exactly.
Yeah, yeah,
Um,
it's
that was a good little wrap up of like economic news. With should we
yeah.
dive into a few of our favorite individual tickers? I actually do want to discuss Tesla with you if you wanted to. Um, it's up
Sure,
to
yeah.
you.
I'm all for it. I mean, it's it's at an interesting spot now. I guess a crossroads of destiny to some. Um, Others, it's going to hell, and for a lot of other people too, it's going straight up to heaven. So it's a very strange spot we're finding it in as far as narratives go. I
Yeah,
love it.
we are in a strange spot. I think I think you and I were discussing before Christmas, incidentally, like what we thought was going to occur. One of our mates, Pingu, was shorting it, and I was sort of saying to him and you and King and whoever that I think this year's
Yeah,
going
we
to be a
were
tough
kind of
year. It's going to be a tough year for Tesla.
yes,
I think there's not many catalysts on the horizon. I think there's going to be like a consolidation year for them, and there's a lot of news at the moment which is sort of affecting Tesla as well. So there's like Elon Musk talking about his compensation plan, how he's awaiting that trial verdict from the Delaware case, so that the board can put in a new compensation plan. How he wants to have a minimum 25% equity stake so that he's harder to defeat at the decision making level. And there's
yeah,
also other anecdotal things occurring. Like I saw there was a big kerfuffle on X.com about Teslas in Chicago who that were trying to get to the supercharger or one particular supercharger location, and five of the superchargers were out of order, and then the cars were just getting stuck there. I think it might have been 50 that brought this to my attention actually, but yeah. What's your thoughts on all the above?
I think the weather issue is just sort of an anecdotal thing. I don't think it really will affect Tesla long term. Maybe short term, people might be miffed, but that kind of goes away once the cars charge back up and they find out if there's any damage done. And if there isn't any, then they'll be fine. So um, I I mean we'll see. I really don't feel like it's being overblown, in
Can
my
I,
opinion.
before you jump into the other part about Elon's
Yeah,
conversation, can I just say that when this story broke, I was sort of having a look at it, and interestingly, after doing a little bit of digging into it, the TV network or the station or whatever that ran the story was ABC 7 in Chicago. Guess who
yeah.
owns that company with?
Who?
No, guess. Well, I'll
Oh,
give you a couple guesses. Well, you don't know?
no.
It's
I
Walt Disney Company. And and as
uh,
you may imagine, they're probably not very happy with Elon after the whole, Bob, go F yourself, whatever the hell it
oh
was at that thing late last year. So I was sort of, and then I was reading more into it, and people were sort of saying, like, yeah, obviously cold weather impacts EVs. Everyone knows that. But if you sort of follow the user manual and you do what you're supposed to do, you don't really have any issues. Isn't it ironic that after Elon came out and had a go at the head of the Disney Co, you're hearing this now from a Disney-owned channel, whereas I think Tesla's like one of the best-selling cars in Norway or those Scandi countries, which just have equally as cold temperatures, and you don't hear stories like this. It feels like I'm not saying there wasn't anything wrong with the superchargers. There clearly was at this location, but it just feels like
yeah.
a storm in a teacup because it just feels like a hit piece, basically. That's what it feels like to me.
It was, yeah, well, it probably is a bit, but I mean, it's exciting. It's probably a bad news day. Nothing really going on, and then there's a bunch of cars parked somewhere and they're dead. So they're gonna drum up a story and they're gonna make a narrative to get some views. And whether you agree with it or not, you're still gonna look at it, right? So
I mean, I
I
saw
think
it.
it
I saw
was,
it all over the shop. People were posting it everywhere. And it's
yeah,
like, yeah,
yeah, yeah. It was a good news piece, because it got people's attention. But like I said, I don't think it's consequential. If you follow, like you said, you follow the user manual. Who does though? Um, you should be okay. And people who live in cold weather areas are aware of these issues usually. So I think you may have gotten a lot of people who got some Teslas on the used market, and didn't really bother to look into how to take care of them. So, and I, that's what it feels like to me. The supercharger thing is just, it's going to be an occurrence if you have snap cold weather. That's what I think. So,
Yeah. And do you have any tickers you want to discuss, or do you want me to jump to another one?
oh well, about the
Or
Elon package
oh yeah, let's
though,
talk
yeah,
about
because
that.
we're
Yeah.
gonna, yeah, we're gonna slap that around a bit. I don't know how I feel about it. Um, his other compensation package is still being discussed in Delaware, so that's just an ongoing thing, and I kind of see it from both people, from everyone's perspective. I can understand why people may be intimidated by that. I can understand why, they may say, I don't really feel comfortable with this kind of a, request over Twitter or X. Um, it seemed like a weird time to bring it up. Just to reference it, before he said that, it had been discussed by a lot of other people on X about giving Elon a pay raise. So the issue was brought up before he even tweeted about it. And that just, it gives me kind of like the vibes that he was trying to prepare people for the question to come up. And I don't know. So we'll see. I
It's
don't know if it's
interesting.
bearish for this. Yeah, I don't know if it's bearish for the stock price. It ultimately should be, but does that mean it's going to go down like 50%? No. I mean, people are going to may not feel comfortable with giving special class shares to the CEO for doing his job, right? Um,
I mean, there's
uh,
precedent
I
there, but I don't know if that's possible. Actually, I think he came out and said that they can't have a structure like that at this stage, like post IPO.
yeah, I mean, that's the thing, is it's not even, I don't even think it's allowed, but that's not my forte of expertise at all. So it would sound like a straight dilution to do that. Um,
Well,
but
the other thing I'm seeing bandied about is buybacks. So there's certain people on X.com that are saying, yeah, he needs a compensation plan, whatever, rah rah rah. But it's at the same time, another potential option for them is they are growing their cash flow. They're growing their cash pile like year on year, yeah, at incredible rates, and they have been. If they don't have anything to invest in from a capex or investment perspective, which is probably unlikely because they've got a lot of products on the go, but if they get too much cash and they can't invest it, they could do some aggressive buybacks, and in that sense, they could just bring his total ownership percentage up that way without issuing new shares, which is interesting.
yeah, that would be another way to do it. But I mean, how much would they have to do in terms of buybacks for that to work is the question.
I
It would
don't
definitely
don't.
make a lot of shareholders very happy.
Oh yeah, it
Um,
would. But I
yeah,
actually, I wouldn't be. I wouldn't be happy if they were doing it for the sake of doing it. Like if there's something to invest in, I'd rather use the cash for that. If there's too much cash and you literally can't deploy it fast enough, then yeah, do some buybacks. But
yeah,
there's this dude on X.com called Whole Mars Blog, and I'm not like endorsing him or anything, but he did do a little buyback 10-year
yeah,
calculation, sort of what do you call it? Like a forecast of like
right.
what would be possible. Um, and there's obviously a lot of assumptions that go into that forecast, so take it with a grain of salt. But yeah, worth a look. Interesting to see what they could get to.
It would be good to see a plan to do buybacks over a period of time to work up to that, and based on that, it could be another measure. Uh,
I'm not sure if it's my weather, Wiz, or if it's the connection, but I'm losing you a little bit, mate. It might be on my end though, but you're breaking up a little bit. We've got um we've got about 8 minutes or so left, you and I. So if you can still hear me, maybe we'll just quickly discuss SoFi. Oh, you're coming in and out there. Can you hear me, Wiz? I think we may have lost Wiz. So
Can you hear me? I can hear
Ah, you're back. Hello. Oh, it's very intermittent, mate. Maybe just let me just say a few final words and we'll sign off because I think we might have lost you. The quality of the audio isn't coming through super well.
Yeah.
Um, yeah, well, it's a good first episode back. Maybe Wiz and I will catch up again, or we definitely will catch up again next week, and we can talk through some of our other stocks we've been keeping an eye on. One that I'm not yet invested in, I've been strongly considering investing in for. I think we talked about it like all of last year, or maybe if every episode probably that we've done was SoFi. Um, Interestingly, I still don't see SoFi as an attractive buy at the moment. I do like what they're trying to do with their loan products. I don't think they're especially unique. Um, One thing that does interest me, which I don't really understand the workings of, is if they take on all these student loan balances, what happens if the government tries to pay those off or whatnot? But yeah, at the moment, like there's not enough growth in their products for me to justify buying it at this current valuation. Another one that we're in that Liz and I have been looking at is PLBY, Playboy Group. It's had an enormous period of growth over the last 6 months. It went from a low of like 44 cents USD back up to what was it?
A buck and a half almost.
Yeah, almost, yeah, 138. So it saw what's that? It saw like
It's
200%
all
growth in a 3 month period. It's now coming back down to earth a little bit, but I mean, I stayed invested. I was buying the dip, and I'll continue to buy, up or down on this one. I think the big risk here that we've discussed with is dilution, because if they run out of money and they can't service the debt, they're going to have to raise like equity raise, and they'll dilute shareholders. And if you haven't got the money to buy in at the same proportion, then you're basically losing out there. But also the risk that um, they're trying to take them private or run them into the ground, and bankruptcy risk, things like that. So, do I think that will occur? No, I think that they've got enough assets, and they're generating. It sounds like they're generating enough income from the most recent fireside chat that they posted on their investor relations page. It sounds like they've got enough going on that they're going to be able to service the debt for the moment, keep Honey Burdette, which I think is the best piece of the business they currently have. Um, and yeah, and just keep going. But if Ben Cohen, the CEO, did confirm in that fireside chat that um, they still want to sell Honey Burdette, and if they do, that should, in theory, clear off their debt completely and then have some money left over. But it just depends on what price they can fetch for that. Um, yeah, but time will tell. Wiz, are you back with me, mate?
I think that I think I agree with you. Um, it's unfortunate that SoFi doesn't seem to have the explosive growth it used to, but that might just be a wait and see game over the next couple of years.
Yeah,
So
that's right.
and
All right.
yeah, and Playboy always, it's an attractive price. It's below IPO, right? So I
Well,
mean,
so you and I have spoken about this ad nauseum, but I'm happy to keep beating the drum, and I am invested in this one. But it's like the sum of the parts is worth more than the current enterprise value, no matter which way you split it. Like Honey Burdette was bought for 333 million USD. The company currently trades at a market cap of 87 million, so it's a penny stock. Yeah, they got a lot of debt, but if they can service that debt and keep growing the various parts of their business, which is Honey Burdette, the licensing business, and their competitor to products like OnlyFans, then it could be an absolute home run. And I just see value there. Plus, they've got all the other assets as well. They've got all the artwork from over the years. They got the brand. They got all the portfolio of different hard copy and digital art. So I think it's
I
just
mean,
a good value play.
yeah, it's a low risk buy-in as far as I see it. You
That's
know,
right. Yeah,
um,
that's right. Well, low like it's a risky
so
it's a risky one, but it's low risk in the sense that it's cheap. You could pick up a little bit, and if it goes bonkers, then you've done all
yeah,
right. Yeah,
yeah, it's like okay, I bought 1,000 shares, whatever, and you know, okay, if it goes down 50%, you have to weigh your options. But I mean, it's it's not like you're buying 1,000 shares of Microsoft and all of a sudden the market goes into a crash and doesn't recover for 10 years. It's a much larger sum of money to miss.
That is
So,
exactly right, mate. Well, it's
so
been bloody good chatting with you for our first episode of 2024. Maybe we'll try and get King on next week. What do you reckon?
I think he'll be partial to it. He seems to want to strike down a few other people. So he'll be
Kidditch.
yeah. The fire burns bright within him now.
I love that. I love that. We're all better off when King's fit and firing, I reckon.
Oh yeah, he's out there looking now, so he's waiting.
All right, man. I'll talk to you later.
All right,
Cheers,
yeah.
mate.